Hey everyone, my name's Andy. I'm from the Finding Value Finance channel. Today, we've got with us again Uselink or Casper out of Denmark. He's fighting a cold right now, so if he sounds a little bit, he calls himself a drunken sailor, a little bit horsey or whatever. It's from that. But we talked about last time. We charted some things. We noticed that we were about to break out of some downtrend lines, some patterns with respect to gold, silver, with respect to uranium and some other commodities. And he, we we wanted to come back. I wanted to have him come back on. He said in about a week or two we should know, if we've got some positive developments, if we break out. And I wanted to bring him back on, look at the charts, see what the data is telling us, and if we're breaking those trend lines and what it looks like a week later from that discussion. So Casper, what number one, thanks for coming on. I really appreciate it. That's number
Yeah, my
one. And
pleasure.
number two, what's it look like? What are we seeing here?
I think we got some sort of a confirmation, the last 2 days in the last week, where the dollar and the 10-year dropped significantly. Especially the dollar I think it had 2 days above 2%. And in Forex, that's a lot of money moving out of the dollar, even though it's only 4%, right? But that's a lot of money moving out. So
Can we see what it looks like a
yeah,
charting
sure.
from a charting perspective? I know the dollar just got smoked, in my opinion.
Yeah, it did.
And we,
I have a clean
mhm,
chart here. So yeah, these are the past 2 days, right?
yeah,
So we saw like a 2% move, closing at the bottom each day. Um, so this was a very good confirmation for me, like we talked about last week, is that I think this could be the time for yeah, gold and silver, uranium, and also the NASDAQ for that matters. Because if the dollar starts to ease a bit here, it will be a tailwind for all commodities and so on. So
yeah, I completely agree. And we saw that last time. Last time in the mid 2000s bull market, we had a strengthening dollar in the beginning of that bull market. Then it turned and started heading lower in 2002. So I think
yeah,
this
it
is
did.
analogous to maybe like late '01, early '02, sometime in '02, where that dollar turned and went over during that time frame.
Yeah, it's back over here, right? Where we see
Yeah, it's
the
right at that top there at '01, '02. The dollar went up, basically went into a wedge type formation, a rising wedge, broke out to the
yeah, true.
downside, and then that was basically in the middle of the bull market of the last commodity bull market. And
Yeah,
I expect it to be similar. Now, another thing that I noticed back in the day was the housing markets. Other housing markets went up quite a bit in other countries. Ours kind of was lagged behind it. And then when they kind of slowed down, ours sped up. And I think that was kind of analogous to weakness in the DXY. That may happen again too. But
yeah.
mhm.
But I think if this were to repeat, I think we're actually somewhere. I don't think we're here actually, but I think we are more or less somewhere in this area here, I would
You think
say.
we're earlier then?
Yeah, I think we could be a bit earlier, but but let's see. Um, um, but to me, it doesn't matter, right? If we are to see the similar thing. But yeah, I don't know. I don't know.
We could be earlier though. It's
Yeah,
very well
yeah,
could be true.
because then we will look like this, right? And then we have to do something, some sideways stuff here, because it doesn't go straight down, right? I also expect, the dollar to do some retracement here in this area right here where we are looking at. It will do some
Mhm.
retracement here for sure. It has to do, because it doesn't just go straight down. So depending on the retrace here, I think we can gauge better, in the coming month where it's going. But it's looking very bearish now, and the confirmation was last week where we lost this level right here. To me, that
Yep.
was the
Totally agree. Totally
yeah.
agree.
So
We saw the drop down. This is the rock drop, so to speak. We'll come back up and do a retest, back test type move, maybe.
yeah, and then
Yep.
we're
Yep.
gone, right?
Just like that. Yep.
Yeah, and
Agreed.
also
Something on the lines of that.
Yeah, and if we lose the 200 DMA as well on this move down here, then it's we're going to go into a 2 or 3 year at least long downtrend for the dollar, the way I see it. So
It's on like Donkey Kong then.
yeah, it is on like Donkey Kong. I love that phrase actually.
Yeah. Yeah. So just to get like a background. So when the dollar falls, it's a huge tailwind, and people prefer to own emerging market equities, other non-dollar denominated assets, because the dollar is now weakening against other currencies. So that's why we watch the dollar. That's why it's so important to understand what the dollar, the DXY, and more importantly, is doing. I just kind of wanted to say that for the viewers and why we're looking at it so in depth.
So yeah, to answer your question short, I mean,
Yep.
I think we got the answer last week.
Yep.
It's looking very bearish for the dollar, and that will be a tailwind for gold and silver, and yeah, the NASDAQ even.
What about yields, like the 10-year yield? I know that you have that up there.
Yeah, I have it here. Yeah,
Because when we combine these two, it starts really telling us a picture about
yeah,
the
it
market
does. It
conditions.
does. Yeah, I think the overall market has sniffed out that maybe liquidity is coming
Mhm.
to a small degree or big degree, we don't know. But I think they're seeing this at as the top for now, at least. It's a very big top for now. But how big the liquidity will be, we don't know. But even if they just stop raising rates, that will also be a sign, or the famous pivot, let's say.
Mhm.
And that will be a huge tailwind for sure.
Yeah, I agree. So we've got the declining 10-year yield. The yield just fell off a cliff through that trend line that you had in there.
Yeah,
And
exactly.
that's a big deal, because a weaker 10-year yield, a weaker dollar, that is like divine. Well, that's like the market conditions that gold and silver thrive off of. They love those types of conditions. And that's
Yes, they
basically,
do.
if you add up gold, silver, the 10-year yield, and the dollar, it's basically telling us that they're going to loosen monetary conditions, and that's what the market is expecting. Would you make that conclusion?
Yeah. Yes, for sure. I mean, I look at the gold to silver ratio as well to see, because it's more or less the inverse of the dollar if you put them together. And you can also see that one started to break down. Actually, it's a very big breakdown, but we will come back to that later. So I think, the market has sniffed out more money is coming. How much it will be, we don't know. But definitely, this tightening process looks like to be over, in my view.
Mm-hmm. Okay. And you know what that chart looks like? I'm just looking at the U.S. government 10-year yield. That looks like the PPI to CPI ratio chart that that I do look at, or the
No, it does.
M2, money supply divided by GDP. It's the same thing.
Oh, you have this. Yeah, I saw that
They
in
all
one
look
of your
very similar.
videos.
Yep.
Yeah, that's true.
So what about like gold and silver? Do we have confirmation that those have broken out? Are they ready to go? What do you see in the charts, and what are they telling us?
Yeah, I think when we spoke last week, I think we were like right. It was a Sunday, so we were like right. Where were we? I think right
I think
here,
we had
more or
one
less,
big
right?
candlestick.
Oh, this one, yeah. So
Yep, that
we
one,
were
I
just
think,
sitting
somewhere in there. Yep.
exactly right there. We were. We talked, on this day here, and we talked that it looked like it was ready to go, right? But we needed 1 more week or 2 weeks just
Confirm. Yep.
to confirm, yeah. So I think for now, gold is very bullish, way more bullish than most people think. And the reason why I say that actually is because, typically when you see this kind of dip below this major big trend line, everyone is looking at this trend line here, the 60, 180. Everyone is looking at that one. And I think people have been shorting gold here a lot. So I think there could be a lot of people right now here that are underwater. And you can also see, the candles, right? Every day you have a big bar, bloody nose, big bar, bloody nose. So I think there's a lot of short covering right now. So when that is all over and done, we get this, maybe let's say we go to this, and then we get the pullback, and then we are
It's game on,
it's
right?
game on, yeah, because
Game
then
on.
this will be a short squeeze, and then pullback, people are buying, and then we are going. I think.
Yeah, so I bought the bottom of that with platinum and silver. I just as we were so what I consider that as an accumulation zone. It's an accumulation zone that happened below the trend line like you've got, which is a slingshot cheetah pattern where it goes boom when all the shorts have to cover as it breaks above all those
Yeah,
trend
exactly.
lines. So I get ultra bullish is I don't know, I'm just early a lot of the times, and I buy it kind of at that bottom.
Yeah, me too. Me too.
I don't wait for confirmation. I let it
Yeah.
rip. I do. So and yeah, we
Yeah.
were talking about that last
And
week
also
on some of
usually,
the
yeah.
companies I bought.
Yeah. And also, I think I'm not that much of a shorting guy, but you have had 3 moves down, so you don't want to short the fourth or the fifth wave in a down move, because that's typically where it's over.
Mhm.
So I think a lot of people got greedy here, understandable, right? Because we lost the big trend line, going back 2 years. But typically, the fourth or the fifth breakout is typically, that's when people get caught up in uh, with the too much bullishness or too much shorting. So it looks good. It looks really
Yeah,
good.
it looks really good. What about
Yeah.
silver? I know you've got silver up there next.
Yeah.
Silver is one of my favorite metals for sure.
Yeah. Same here. It looks to some degree like the gold chart. We have, to me, we have the 2150 and the 200,
If
the 22, sorry, right
what
here.
if you back way out? Like if you back way out and do like a multiple like multiple cycles. Yeah. You can see before the last cycle in 2000 late 2000s where it bottoms at 2008 and then it really takes off. That fractal looks the same as the fractal we have going on today. If that makes sense. Yep, that bottom there and the top. Yep.
Yeah.
So the
Yeah.
bottom of 2008 correlates with the tops in 2004, 5, and the breakout in 06. And that same fractal
Yeah.
exists on the right-hand side. It looks ultra bullish to me.
Yeah, it does. And also note, it's a good point. And also note, the quick dip below the 200
Yep,
rising moving average, right? Then poop,
just
right
like
back
that.
up again.
Yep.
You see that very often as well. So yeah, it could, again, I think we're looking for a very interesting week for gold and
Yeah,
silver.
I
But
totally.
but but if we get this, me too. But I think if we get the retrace in the dollar, I mean, don't expect too much of gold and silver, because it has been very good the past 2 weeks. So don't be too scared. I think, if we get a 2 or 3% rally for the dollar, I mean, that would put pressure on gold and silver. Maybe pause it a bit or go dip below again. But I think the overall trend is set now for an overall reversal for the dollar. So yeah.
Yeah, so yeah, we're coming up to a lot of resistance, is what you're saying. Then so you're coming up to
Yeah.
resistance. We're going to hit that resistance, and that's where things could get stuck for a little bit. Yep.
Yeah, exactly. Yes. So also the 200 moving average is still going down a bit. So there's still a decent amount of downward pressure, but it looks like the tides are turning.
Mm-hmm.
It's early, so
Then we've got the gold to silver ratio that we're showing here. What are you seeing in the ratio? What is it telling us? Is it the same, more of the same? We'll call it more information or more data signaling that we have maybe perhaps loosening monetary conditions coming, right?
yes, totally. Because in a commodity bull market, you want this ratio to go down. I think most of us, know that. If not, that's really one ratio that you should be looking at weekly, in my opinion.
Mhm.
And what you could see is that for like 2 years or so, we have been in this up moving, expanding wedge or expanding formation. And what we saw 2 weeks ago was the breakdown of that big formation
ratio.
here, right? Yeah. So we saw the breakdown, and actually last week we got the back test again, and we like to see that. So what we want to see for this week is to roll over. And that's all why I saw a lot of people on Twitter actually complaining that silver didn't do anything good, while gold were up like 1% or so on the last day. But then I told them to look at this ratio, and this, because all this ratio wanted to do was the back test, and that's why silver didn't outperform gold at that point. So hopefully we get the return, rolling over again, and then getting below this very long green support, which actually is a big one. It's a big one. So
if you back out even further a little bit, and so
okay.
one of the things I always see is when you come down, you get like this big bowl shaped pattern, and sometimes it goes all the way up, and they consider it a double top, and then it just rips down right after. We call that the big leg of the big move. So I think it's coming. I think we're right on the cusp of a big move happening in silver, gold, silver, platinum, all of them.
Especially if we lose this green trend line here, that's a big one.
Yep.
That's a very, very big one.
So really what this is saying, though, what this is telling us is that liquidity is coming.
Liquidity is coming.
It really is.
Exactly.
Yeah, that's the double top I usually see.
Yeah. So this was, the COVID, when everything crashed, liquidity was nowhere to be found, and then they started endless QE, and now we have gone back up again, and then it looks like we're gonna get QE, or not QE, but rate stopping, whatever you want to call it, the pivot. Yep. It doesn't matter. It's gonna roll over again to the downside.
What you've got some lines there. What are those lines?
These are called Fibonacci extension, and this is actually where you try to measure the next move or a possible target for the next move, and how it is used is actually you take the top from the COVID high down to this low here, and then the high again for the top of the move. So we have the 1, the 2, and now we're looking for the third leg, the famous third leg down we're looking for right now, and
which is the big leg.
The
third leg's the big leg. Yes.
Yeah, exactly. So what we want to, if you look at the measured move, right, the 100% measured move from this top is actually the previous low from 2011. And I think the way this correlates together, I mean, it looks too good to be true, but that's also why I'm saying that the third leg will be, the touch of 30-1 in the gold silver ratio. That's what I think we're going. Not tomorrow, but in like, I don't know, a year or whatever. So
yeah, so you're basically what the gold and silver ratio is telling us is that silver could outperform gold at about a 3x. Is that about right? Because it's about 90 right now, right?
Yeah, 2 point whatever,
2 point
7.
something.
Yeah, exactly. 2.7 or so. Yeah.
That's a big outperformance though, because I'm bullish on gold, and then if silver does 2.7 times, that's going to be absolutely ridiculous, and hopefully the long shot platinum can do
better,
maybe 3x of silver. Fingers crossed.
Exactly. And let's just remember this 30-1 ratio. If you go back to gold a bit here, just we zoom out, right? So if let's gonna clean up the chart here. So if we take, this is, a famous, I wouldn't say copper handle because it's went a bit lower, but let's measure the bottom to the top here. Sorry, this one. Here it is.
You want to use the big one.
Yeah, the big one. Sorry, yeah, my bad.
And that might be that if you go even bigger than that, I think that's the handle, the whole thing, right?
Yeah, it could be.
Oh yeah, you're right. You're right. Okay, now it makes sense.
Like this.
Yep.
So you could see it as a cup and handle or a shoulder as well. You could also take it like that. But anyways, if you measure the bottom from the cup or the head, whatever, and to the top here, we have roughly $1,000 increase, and you take that on top, right? So we get to, from the current state where we are, we get to like, let's call it 3,000 just for easy calculation. And if you divide that, I know the math, but just to show it on screen, right? 3,000 divided by the gold to silver ratio at that point, you get gold at 100. No, sorry, silver at 100, my bad. You get silver to 100. $100
ounce silver.
Yes, exactly. And if you go back to silver again, and this is where it gets even more funny, right? if we remove the few drawings we have, put it on log scale just to make it a better visual,
Mhm.
we have the same here again, right? We have a big cup and handle, right? It's like
massive.
40 years old. It's
It's the
massive. Yeah.
biggest cup and handle I've ever seen in my life.
Same. It's huge. Again, and if we were to measure, you know, the bottom here to the top, that's roughly, let's call it 50.
Mhm.
And then on top again here at some point. That doesn't make sense. It's $50. We need to go
Well,
scale.
you've got it on logarithmic probably.
Yeah, that's why it's messing me up here a bit. So
Yep.
it,
It's
was a
on the
$50
log.
move, right? So
Yeah.
let's
Goes to
let's
100.
put it there. It goes to 100. So to me, it's very well aligned to have this play out. I think it's very high probability to see this in 2 years' time, let's say.
Now here's the question though. Why shouldn't we be doing this on logarithmic? Because it's a long-term chart. We've got lots of inflation and other garbage out there.
Mm-hmm. Yeah.
I mean, should we be looking at this at a logarithmic scale versus a regular scale?
It could very well be for sure. I mean, then
Now, what does it look like on a logarithmic scale if we were to do that same calculation?
it looks even more funny.
Which
So
is going to,
that's
yeah,
very
no,
nice.
I like the way it looks though.
Yeah. Then that's also roughly my end target, you know, these
700-ish or
six.
something.
Yeah, exactly. 600, 700.
Yep.
But I think that would be, you know, a few more years down the road actually. So the non-logarithmic cup and handle will play out in the next 2 years, let's say, and then in the 5 to maybe 8 years, we might have this the logarithmic.
Do you think it's going to take that long, or do you think it's going to be doing a whole bunch of nothing, and then all of a sudden it's like it's in our face, it's there,
Yeah,
like in
that's
like
what
a year or
silver.
two.
Yeah, that's what silver is doing. But I think, you know, going from 22 to 100 in like a year, let's say, is also a very big move.
Mm-hmm.
But as we all know, once we get above the 50, all bets are off. I will even say above 30, let's say, all bets are off, you know, because silver is so heavily shorted, you don't know what's going to happen at that point because all the shorts has to cover and all that good stuff. So it could go way higher than we think. I mean,
So
way higher.
the two largest shorted position, like the shorted commodities, the two largest shorted commodities is platinum and silver. Silver being number one.
Yeah, exactly.
And those two, I think it's going to do nothing, and then we'll get a little bit of a move, and then it's going to be like game on, gone.
It's gonna make a nickel. It's gonna, yeah, you know,
yes,
the nickel squeeze.
the nickel
Yeah,
market
for sure. Yeah.
Yep.
And we could hit 600. We could hit 2000, let's say, because you don't know what's gonna happen when everyone is buying back. You know, the shorts. You don't know how screwed they are at that point. So it could go.
Yes.
Yeah.
From all the shorts, it'll be a big short squeeze.
Yeah. Yeah, exactly. Yeah, this is the nickel squeeze. So we get this slow grind, and then all of a sudden, the shorts has to cover, and then it just escalates, boom, after that. So
yeah, and then JP Morgan came in and they said we got to control the markets. Brought it down a little bit. Now it's starting to head back up again.
yeah, it is.
Good.
But imagine you know having a long position at that point, and then just having it removed. I mean, it's just yeah.
Yeah.
It's you knew it was coming, and then all of a sudden, too bad.
Yep.
I mean that would piss me off for sure. So
what about what other ones? I know we've got uranium ahead of us. I definitely want to go over uranium because that's a beast of a market. But what else you got?
oh yeah, um, I think we just mentioned NASDAQ actually just quite a bit because
Okay.
I'm not in NASDAQ at all, but I think, you know, as you can see, we actually had some sort of bottoming pattern here as well in the NASDAQ. And again, you know, everyone is short, everyone is bearish, and you know what happens when everyone is on the one side of the of the equation? It rolls over or it goes up, you know, and short squeezes everyone.
Yep.
So I think I wouldn't be surprised to see NASDAQ, you know, actually do somewhat of a big move here in the coming days, weeks or month, actually.
Yeah, I think it could actually do. Okay, so you know how we had in the ratio, gold to silver ratio, how we got that U-shaped pattern? I think that could potentially happen here where we kind of U-shape back up, and then it's a bear market, it's a bull trap, and then it'll fall again. That's my guess.
Yeah, but I think, you know, even if depending on how much they're going to ease or rates and how many are short and so on, I think we could double top here. Yeah, we could easily double top here.
Agreed.
Yeah.
Yep, it
easily.
could be. And that's
So,
when Uranium and all these other guys, they like the liquidity. I think it's going to run like Forrest Gump.
yeah, and he can run fast.
Run, Forrest, run.
Yeah, exactly.
Yeah, so
So, yeah.
the NASDAQ, I agree with you. I think liquidity's coming. I think they're going to do something. I don't know what. Everyone's piling in like they're going to ease. So maybe they're wrong. Maybe they aren't. I don't know. That's really the question that needs to be answered at this point.
Yeah. And remember, you know, the bond guys, the 10-year bond guys are the cleverest, most clever persons, I would say. They know what's coming. They have the correct models, you know, to calculate what is going on. They usually they are never wrong, more or less. So
okay. It's good. What else you got? I see we got uranium. Uranium. I'm eager to talk about uranium. We got a lot of uranium viewers. That's for sure.
Yeah, exactly.
And we know you're loaded in uranium.
Very much, yeah. I bought, you know, yeah. I bought you know, at the end of the 2020. So this move down here, I loaded up big time. I know a lot of people bought, you know, back in the crash, but at that point I wasn't, you know, that much into the uranium sector. And then yeah, so I loaded up hugely big back then. So I'm a bull for sure.
Yeah. So do we have confirmation here that we could be going higher? What's it looking like? What are you seeing?
I might sound boring, but next week will tell us. just like last week. So no, but this the 71, 72 level for me has always been, you know, this bearish, bullish. You can see it on the chart line for me. So if we can get above and stay above, let's say 72 next week, it's game on for me. It's game on again.
Yeah, I see lower highs and I see higher lows. So we are compressing against each other at a point here. And whenever I see that means you got nice, good pressure or something that's about to break to one side or the other.
Yeah, exactly.
Yep.
You can also see here, if I add the Bollinger Band, you can see if we were to pop, let's say tomorrow, we are going to have the expansion of the Bollinger Bands, right? The upper one will go up like this, and then the other one will drop down here and then catch up. And whenever you see that type of Bollinger Band formation expansion, yeah, you know you're in a bull trend. So,
well, let's expand that Bollinger Band, guys.
Let's do it. We are right there. We just like 2% or so. So it's we are close.
Yeah, I've been eyeing a lot of stuff in uranium. You know, from all these different sectors that we're looking at and going over, what sector do you think is just looking really good?
I actually think there's a lot of sectors looking really good. Many of which is not even talked about. I think I talked about last week about the cannabis sector. It's been beaten to death.
You got that one right there. Yeah, let's take a look at it.
Let's take that one. And I have to move it to logarithmic because we went from like 70, I think it is.
Yeah,
even higher than that, right? And then down to like a 10 or so, more or less. So you have to do it on log scale. But if we were to remove and go to the weekly, you can see this nice, beautiful bearish channel, right? Or a downtrend, let's say. And last week we popped out just a tiny bit, and to me, you know, once we can start to move above again, this resistance area, I think it's game on. You know, no one is talking about it, so I think there is some an insanely good risk reward in this sector.
I may have to do some investigations on it.
Yeah, I would suggest you do. I mean, it's I think it could do very well. It's been beaten to death, you know, as you can see, and no one is talking about it. Everyone is bearish, and that's when you want to look for an entry if you can.
Yep. Yeah. So you're thinking this one might be the least talked about of any sector right now?
It could very well be. I'm I haven't seen anyone that I'm talking to or Twitter, whatever, that is talking about cannabis. So I
Okay.
think it's very early. If we can get above, 16, 17 the next week, I think we are in for a very good pop here. So
Good, good. Are you taking positions in cannabis or anything? Are you trying to get long in it or?
yeah, I went long like 2 weeks ago.
Okay. Okay.
So I went into the weed one,
Oh man, you're
the
hitting the weed.
the cannabis. Yeah, I haven't tried it though, but
Oh, it's got the
but
double bottom.
yeah, it does exactly. And also we are right there again, at the resistance.
It's
But
it's
if you
a
look at it closely,
oh, it
yeah,
looks good. Looks very good. Very,
looks
very good.
very good. Yeah, we stayed
Yes.
above, nice big green candle.
Mm-hmm.
It's game on, I think. And remember, this is on log scale, right? So we have a long way to the top if we were to get there. We are at 5
Mm-hmm.
now, and the top is 70. So
Yeah, it's a
I'm not
double
saying,
bottom, guys. It looks really good.
yeah. And a funny
I like-
note, the exact bottom right was the gap fill from back in 16.
Yep.
The exact bottom. That's that's funny.
So what's crazy here, and I've seen these charts, if you draw a line going across from the top of that gap, basically going across, that's one big breakout, and then that's a retest of that breakout. And
Yeah,
then we're going to go into I think, into a big long-term bull market.
yeah.
Because I'm seeing that also in uranium stocks are doing it.
Hmm. Yep.
A whole bunch of different stocks are doing it. And these are all equivalent to these big um, markets here.
Yeah, I agree. Often you get these gaps, right at the exact beginning of the bull market of a stock or a sector or whatever. You get the gap up, and then it all fizzles out, and then you get the retest of the gap, and then you're on to the next wave. So,
Mm-hmm.
and as you mentioned, uranium has done that a lot lately, filling all those gaps, from back in 2020. So yeah,
Yep. Yep.
it
Yeah.
looks
So I
good.
think it looks actually excellent.
It does.
Definitely.
It does. Yeah.
Yeah. So overall, though, we've got lots of opportunities. They're across a
Yeah,
whole
we do.
bunch of different sectors. They're all looking very similar in terms of like patterns, breaking down trends, stuff like that. We've got potentially a loosening monetary kind of overarching theme based off of looking at all these different sectors. What other things can you kind of maybe conclude or talk about kind of what you're seeing in the markets if there is anything else?
I mean, just before we went on, I talked to a guy. He looks like you, actually, and and he mentioned Bitcoin,
Yep.
and I have said, for whenever I exited Bitcoin at 55K, I said I would re-enter at 12K. So that has
Mm-hmm.
been my target, roughly 12K, depending if it's 14K, it doesn't matter, but in that area, let's say 12K. But the dollar is going down, yields are going down, NASDAQ going up, everything is looking like it could turn around here. So why shouldn't Bitcoin? I mean, everyone is bearish. The last week we have this, what was it, FTX exchange, whatever it was. I don't know
Mm-hmm.
that much about it, but it was some sort of exchange that blew up. So I think, I think if we didn't have that blow up last week, I think Bitcoin could easily be at 25K today.
What you're saying is we got an opportunity here.
Yeah, I think we are. And again, everyone is bearish from last week. Understandable, of course, but everyone is bearish. Everyone is shorting it again.
Mm-hmm.
I think the risk reward in Bitcoin is not to be missed, let's say. And if we get that liquidity injection or easing, I think that's what Bitcoin is made of. So
Yeah, it likes a good dose of liquidity. That's what I'll
yeah, it
say.
does. Yeah.
Also, if you look at it, if you draw a line going across from the breakout of the last breakout, that's probably what you were looking at before potentially.
Yeah,
Is that
exactly.
where you get your 12K?
Yes. This the confirmation somewhere around here,
Yep.
right?
Yep.
12K-ish breakout.
Yep.
Just like we saw on the cannabis before the breakout exact timing of the breakout, you usually get a retest. So yeah.
Yeah, I think, yeah, I saw that when I was looking across. It's probably where you got it. I don't know if it's going to get down there. That's
Me neither, man.
crazy.
Because
Yeah.
if the NASDAQ and goes up, dollar down, I think Bitcoin have a fair chance of going up as well, depending on how this situation with the FTX goes. But I think you should be looking for an excuse, let's say, to enter Bitcoin. If you see information, however you look at the markets, it might be different from mine. But if you see some sort of a buying opportunity, you should take it. Is my take on it, because the move to the upside could be massive because everyone
Yeah.
is bearish again. So
Yep. And the way that I do it is I scale in. I kind of cost average in and get my shares, or I don't know. I don't buy coins, but get my shares as I kind of scale into it, and it kind of bottoms out. That's exactly what I do.
Yeah.
All right. Do you have anything else to share? No.
No, I think we talked about the stuff we talked about last week, so I don't have much more actually.
What
But
about what's your take on copper? Because
it had a good
I've seen
week.
copper do some serious moves here.
It had an amazing week. I
Yeah,
think it was the best
up a
performing
little bit
metal actually, more or less. So
right there. Yeah,
just gonna remove all this stuff here.
yeah, it looked really, really good. What's your
Yeah,
take on that? You think this thing's bottoming out?
Yeah, for sure. I think we got the higher lows, the higher highs and higher lows in play right now. So I think copper is looking very good.
Yep. Yeah, I agree with that.
But it is coming up to stiff resistance, so let's see how it goes. But it looks good. So I think any pullback in copper right now and copper miners should be bought. That's what I'm trying to say here.
Yeah, agreed.
So we might get to like 4.1 and then retrace to below 4 again, and then that's the buy that you have to do on the pullback. So yeah, it looks good.
Okay, that's good. Yeah, I like copper. It looked really good last week. Yep, broke out of that.
Yeah, exactly.
Yep.
Let's make it to the absolute maximum here, to the exact tip.
Uh-oh, he's playing just the tip game. That's dangerous.
Yeah, tip game. Yeah, it is. But it is, it looks good. It looks really good. So
okay.
it sure does.
Anything else
again,
you'd like to share, or we're basically good?
I think again, next week is going to be. It could be, the beginning of something very good that I have been waiting for the past 1.5 years, let's say 2 years. Yeah.
Yeah, it could be that third
good.
leg.
Yeah, it could be. And since I bought, at the bottom of the first leg, the gains that I will get now is gonna be, what I have been waiting for.
The massive
Hopefully.
gains.
Let's cross
Fingers
fingers
crossed.
and so on. Yeah, exactly. So
all right. Yeah, that's all I've got, Casper. Thank you for coming on. Really appreciate it. And I love the analysis. I like the big picture view, clean charts that you have there. So looks really good.
Yeah, thank you. I love to be on, so I will happily do that again. So yeah.
Okay. Yeah, we'll get you back on in a week or two, get another update and see how these things progressed. Because I think I find it very interesting from other viewpoints and other people who chart things that it's just not always, my viewpoint. So it's always good to see other ones and get other ideas and see other sectors that maybe I'm not watching. So
yeah, exactly. But maybe we are having a bad week, and next week we are bearish. So, but right now it looks it looks good. It looks really good right now. So
yeah, it looks good so far.
Yeah, it does.
All right.
It does.
Well, that's all I've got. Thanks for coming on. And if you guys made
pleasure.
it to the end, put down in the comment section, go Uselink.
Go Uselink.
All right. That's all we've got. We'll catch you next time. Thumbs up if you guys like the content. See you later from Finding Value.